Hello, everybody. Tim Knight here, and it is a super green day, as FOMC days usually are. The bulls are getting a big bounce back from all the selling we've seen over the past couple of weeks. The selling really did start just almost precisely 2 weeks ago, and it's been pretty steadily down through yesterday, and then today we got a big old bounce. I've got a bunch of symbols to go through, so I don't really have anything in the way of an intro. Let's just talk about the charts. Okay. We begin with a spider. The lowest we got on this was back here on the 25th, and it just about closed this gap, but it did not do so. Since then, it lingered through yesterday, and then today it shoots higher. Look at what it did. Sealed the gap up beautifully. So we are just above the midline channel, the midline of the channel again. We have sealed the price gap. And the real question at this point is there anything more to it? I dialed back yesterday and this morning to 37% cash to take some profits and take some risk off. I had only one wreck today, which actually is kind of a nice little trading lesson that we'll get to in a bit, but we'll talk about that near the bottom of the show. Here's the diamonds. They are right near a lifetime high. The Dow actually hasn't shown much of a sweat through all of this selling. It just kind of rolled its eyes as a whole thing. So we're well above 40,000 on the Dow. The diamonds are above 410. There it is, just strong as can be. And a compadre to this, XLI, which is a different ETF, but also industrials, is at a lifetime. Tech stocks, to some degree, been taken on a chin through yesterday. The industrials have completely shrugged their shoulders at the whole schmear. I mean, you can see this by way of the cubes. Gentlemen, we're just speaking about the cubes now with a meta forthcoming after the close. And the gap beckoning right now is way up here. And there's kind of two ways to look at this. One of them is the gap, sealing up that price gap, because it's interesting. Yesterday on an intraday basis was the lowest we've been in months. And we undid a lot of that. We undid basically over a week's worth of droopage. So the question is, will we seal the gap or will we not even get that far? Because the other possibility amongst the infinite sea of possibilities is something like this. Something like that being around the top. And when you and I meet on these FOMC days, I have to bow out of I was listening to the press conference because it's interesting seeing the questions and answers and how it affects the market. So I don't know what they're saying now. It's not collapsing now, but we're definitely weakening away as I'm glancing around at my different screens here. So will there be follow through tomorrow? Like Dr. Jim just said, on the heels of Microsoft, no one would have guessed we would have it was over 600 point rally on the NQ. But is this it? Is this it? I hope so, because I was kicking myself yesterday for not being in NVIDIA. I'm in it today. I sold into that strength, and we'll see if that works out or not, because I think NVIDIA is still a gorgeous looking chart on the short side. Yeah, definitely now instead of better than yesterday. We're still in the thick of earnings season. Some have done better than others. This is not one of them. This is Pinterest. Pins getting just zapped. Now this bottomed out. Well, there's been a couple of major bottoms. The one bottom was kind of in the earliest stages of the COVID crash, and it was down in the teens, blasted higher, almost to the triple digits in the throes of the COVID relief and everyone staying home, et cetera. Lost almost all of that, and it's been recovering since then, but it has unwound months of recovery at this point. Thinking about this a different way, we are at the same price now that we were around the IPO back in the last decade. Okay, that's so basically, if you look here near the beginning and go all the way across, we've come full circle. It's a very messy circle, but that's what's happened. So that's Pinterest. Starbucks, this one popped. It's kind of a messy chart. I didn't have a position, nor do I intend to have a position. There's a lot better fish to fry out there. I'm inclined to think this pop is just about all it's going to get. It could hack and fight its way higher up to that dash line, but I'm thinking this is probably just about it. Here's one I was toying with the longest time, wondering if I should bother. I didn't. I'm a little bit mad at myself for not doing so. This is Humana, HUM. Those of you who have watched me for a while know that I like to see repetition in behavior because stocks, they're like people. They have different personalities, and their past behavior tends to indicate what their future behavior will be like. We've all heard the universal disclaimer, past performance is no guarantee of future results. Yeah. But when it comes to charts, it kind of is an indicator because they express themselves. And as I looked at Humana, what was alluring to me on the short side was this dash line right here, because we'd pushed all the way back up to it. But as I looked at this, I would see like top, plunge, and then recovery. Top, plunge, recovery. I didn't see instances of top, plunge, and then another plunge. So I didn't bother. Anybody out there who managed to, congratulations, because it's getting zapped hard. It's down over 11%. Okay, well, the belle of the ball yesterday was Microsoft, and they're down a little. And yesterday, after hours, it was just getting shellacked. It was down really hard. It has shaken pretty much all that off. But it's still this is not a bullishly configured chart. This top is still very much intact. We've got this resistance line. We've got this resistance line. Keep in mind, the NQ is up almost 600 points now, and this poor thing is actually just about the only red you're going to see on the screen. So Microsoft, looks like it may have peaked for a while. In sharp contrast to this, AMD, and I talked about AMD yesterday, and I said repeatedly, I had no position, but my dumb guess, trademark dim night, was that it would go up. Why? Well, because the poor thing was so beaten to death. I mean, it was battered down to this green line, and go up it did. It went blasting higher, although almost all the gains earlier are gone. It's still up, sure, but on an intraday basis, it's lost most of those gains. And why? Well, it hit this sucker right here. And I didn't add this ex post facto here. This has been here the whole time. This is the resistance line. It almost nailed it to the penny. I'm not bragging. No position. Didn't make her lose a dime on this. It's just cool. Cool on the chart side. NVIDIA is up strong, almost 13%. I was so mad at myself yesterday because I'd gotten out of my NVIDIA puts as a salve to that. I bought some SMH puts. That worked out okay. I got out of those early today. The NVIDIA puts were doing amazing. Well, they got, put it this way, they're down like 60% today. They got like killed. Mercifully, I was out of them. But I'm back in because, and not in a huge way, but I definitely think this is still a really nice setup until we get down to that trend line. And as time goes on, the prospect of closing that gap shrinks because this channel, I think, is more potent than the gap. We managed to get down, almost broke into the double digits. Didn't quite get there. I heard earlier that I think yesterday after close, it got down to like 101.01 or something like that. So we're not quite to 96.01 yet, but it's getting there. But I don't know if it'll ultimately get there. I do think we will tag this lower trend line of the channel, though, back into the puts on that one. And SMH in general, as I said, I scurried out of those, but I think this gap is an exceptionally strong level of resistance. Bullish Electronic Arts. I know I'm a perma bear and all that, but listen, I will point out a bullish chart when I see it. This is a bullish chart. This is a really good looking bullish chart. Electronic Arts, EA, lifetime high. And there are times when lifetime highs is just, too high. This is a terrific setup. It's a big old right triangle pattern. It goes back for like half a decade or more. It's bullish. So if you said you have to buy a stock now and hold on to it for 5 years, not a bad choice, I think. Blackstone, kind of the same idea. Nice looking chart. I'm just trying to dispose of the idea that all I do is short stuff. There's plenty of great looking bullish stuff out there. Well, no, not plenty. There are exceptions. There are some good looking bullish charts, I'll say that. Appropriately enough, Powell Industries is having a great day today. This is up massively, like $50, almost 17%. The J Powell shine. Our daily peak at Tesla, talking about beckoning again here. This gap, that to me is the target. And resistance, support down here is very, very strong. I think that, Tesla may well have its glory days again some years from now, but we're back into one of these just slogs. But the cool thing about these slogs is that there's a lot of information built into the chart about like where support and resistance is. So you can, if you said all you can trade is Tesla, you can make a job out of that if you're good at it. Tesla's very dynamic and there's a lot of clear levels to work with. I would also say to just keep it the theme of Tim Knight doesn't always just short stuff or say bad things about stocks. Listen, Lucid's looking good. Another electric vehicle company here, LCID. I actually did a post about this earlier today, and it's strengthened from there. It's up almost 5%. It's hammered out a nice little bullish base, and so is Rivian. Rivian's looking good too. This is up over 3%. Here was my bad news today. VST, and dispense with all the other symbols. Last night, VST, on which I owned puts, came out with some kind of news about regulators have approved for like the next 30 years their operations of some nuclear power plants. So it wasn't earnings or anything. It was just like good corporate news. And the stock exploded higher. Until yesterday, it was looking fantastic. It was like my best looking short. It just kept falling every day. And then all that was reversed. So my inclination was, gee, I think I'll get out immediately because this sucks. It's no fun to have a big old loss like that. And so I was kind of gritting my teeth. The market opened. Yes, the big old fat profits disappeared, but the loss was pretty small. I stopped myself from just dumping. I just took a look at the chart and said, you know what? Not only is the chart not broken, I'm going to get even more. So I bought more puts on it. And I know the old saying, losers, average losers. Okay, but the chart's still good. I wanted more of this stuff. So I got some. And the reason why I didn't just like panic and dump it is because of a little lesson that finally is maybe sinking in. I experienced a couple of weeks ago by way of this one, Shopify, because I had puts on this one too. And some really good corporate news came out of that in the way of a very strong analyst recommendation. And this happened. Big jump. And what I refused to recognize is that the chart is still good. Nothing's broken about it, but I just panicked and got out. And it always feels good to get out and not have risk anymore, right? What happened afterward? Down, 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 down. The next day, that analyst pop was gone. I didn't want to do that again. BST, yeah, it's having a great day. My puts are not having such a great day, but I got more of them, and it's still a good looking chart for now. So logic, not emotion.